Hi, this is Patrick Henry, the CEO of QuestFusion with The Real Deal, What Matters. I'm here today with Dr. Ron Reedy and Rory Moore. Both these guys are good friends of mine, both serial entrepreneurs, have held C-level positions, multiple C-level positions in multiple companies. They've been angel investors for a very long time. So both raised a lot of angel investment money for some of their companies, including where they co-founded a company called Peregrine Semiconductor, and they just are a wealth of knowledge. Rory actually, I was on his board at EvoNexus, and he was gracious enough to read an advanced reader copy of my new book, Plan, Commit, Win, 90 Days to Creating a Fundable Startup. And one of the things that he mentioned was the focus of the book is really on your first institutional round of financing. Once you're past the bootstrapping phase, once you're past the friends and family stage, and you're ready to approach, venture capitalists or very high net worth angel investors. And there's actually a lot of work, obviously, that goes on in terms of funding a company prior to that. And these guys both have a lot of experience with that. So I thought it would be great, for the entrepreneur audience out there to hear some of their perspective. So why don't both of you guys just give me a little bit more about your background for the audience, and then we'll kind of jump in and do some questions.
Yeah, so basically, Rory and I go back to high school.
Okay.
Where we were basically juvenile delinquents, and so we have a long track record of getting ourselves in trouble. And his parents always said, you're a smart guy, maybe you'll invent something. When you do, call us for financing. At the time, I didn't know what that meant, so I picked up the phone, called Rory, and said, I got this idea. And Rory said, I'll be over tomorrow, we'll talk about it. So that was really how we got started on Peregrine.
Okay.
Yeah, that's true. Ron and I go back to the high school days. He went in the Navy, I went in the Air Force, but we stayed in touch with each other. And then he ended up working at the Navy lab in San Diego, then called Naval Ocean Systems Center, basically running the microelectronics lab. I had owned some companies in Phoenix at the time, and Ron indicated there was a technology at the Navy lab that had some commercial potential, but he needed angel money, needed seed capital, but he also needed a co-founder.
Okay.
And I signed up for all three.
Okay.
So that actually got me to move to San Diego and found the company with Dr. Reedy and Dr. Mark Bergner, our third co-founder. And that led to an exciting new career for me personally, but it also led to sort of reinventing myself as an individual and ultimately to EvoNexus, an incubator.
Okay, cool. So, Ron, why don't you tell me a little bit about the original idea with Peregrine Semiconductor, and did it evolve over time, especially kind of in the early years of the company?
Yeah, so in hindsight, Mark and I had a meeting once, and we both said, we want to invent a new way to have a company fail. And it sounds idiotic, but actually our meaning was, if it's in a book somewhere that don't do this or do that, we wanted to learn from other people's past experiences. And if we were going to fail, we didn't want to then walk through an airport and say, oh my God, look, we just did what they just told us not to do.
Okay.
So in hindsight, nowadays, they say don't start a company based on technology, start a company that went on products, on markets, on customers, on outcomes. Now it's, it's almost the first question is how you're going to get out of this thing.
Yeah.
But Peregrine was a technology startup, and it was at the very end of the era of what I would call the great era of semiconductor technology-based startups.
Yeah.
Intel started because they wanted to do MOS. So all these companies, Linear Tech, you name them, the great companies of the 70s and 80s were based on a semiconductor processing trick or know-how.
Yeah.
And the fabless model changed all that. So we were the end of an era.
Yeah.
And honestly, when I talked to Rory, I said, I know how transistors work, I know how all this stuff works, but we got to figure out what to do with this technology. And that's why I wanted a business-oriented co-founder, because to me, whether Peregrine was a great startup or not, most great startups, you can see there was a team that started.
Yeah.
You have Jobs and Wozniak, probably neither one of them begets Apple by themselves.
Yeah.
You got H&P, of course, Hewlett and Packard,
Yeah.
you got Noyce and Moore.
Yeah.
I mean, you can just see it over and over again.
Yeah.
And I was just smart enough to know I only knew this one little piece of technology.
Yeah.
And I really needed business and finance and all the other things that Rory knew how to do.
Sure.
Because he had run companies, insurance companies or not, they were companies.
Yeah.
So that's why I really reached out to Rory and said, I need more than your first check. I need you to be involved.
Yeah, I mean, and the data proves it out. I wrote an article for Entrepreneur about this very topic, why startups succeed and why the vast majority fail. And this was one of the big things is, having that combination of the business capability as well as the technical capability from a product standpoint. Very few companies make it if they don't have that combination of capabilities. So tell me a little bit, so did you guys bootstrap this thing for a year out of your own pocket, or tell us about the early funding of the company?
Oh, the early funding of the company, first of all, Mark and Ron worked at the Navy lab, so they were living hand to mouth.
Sure.
As government service employees.
Yeah.
So they needed someone to come in and provide seed capital, but also some of the things he just described on the business aspect, and access to other people's capital. So Ron and I sat down and we said, okay, we've got a lot of connections, both of us. Beyond my $250,000, who can we go to next?
Yeah.
And we put together a list, including his family, my family, and extended family. And the first $10 million, the first $1 million we raised was literally from the term family and friends.
Okay.
And we raised $1 million. We did it in, I'd say less than 60 days. And it was total leap of faith, money, and trust in the team.
So this was a belief in you guys as individuals, probably not even understanding the idea that much, because Peregrine was a very technology-driven company.
Right.
So, there could have been some friends and family that might have been engineers, but the vast majority, they're betting on you guys as individuals.
I think we had one engineer in the semiconductor world. It was his brother-in-law.
Okay.
But the rest of the investors really didn't know the difference between chips and chocolate chips.
Yeah.
But they believed in us.
Yeah.
And they believed in what we presented we were going to do with our technology.
So this kind of friends and family, bootstrapping money you put in, how far did that get you from both a time standpoint as well as kind of proof points for the technology and what you were trying to do as a company?
That's a great one, because it gave us the ability to start. It enabled Ron and Mark to quit their day job at the Navy, which we had to have them full time.
Sure.
It enabled us to then grow a little team, myself and Ron and Mark, and added another person along the way, and allowed us then to have the ability to create some chips at the Navy lab that we paid for. So we basically used the Navy lab as a fab.
Okay.
That was unique.
Yeah.
Yeah, that was our first fab. I'm going to correct Rory a little bit. I believe, in addition to my brother-in-law, who happened to be the guy running the what was it called? The Merced project at Intel. So he was a very senior guy. I went through, what does it mean? He introduced us to Intel. Rory had a friend in Scottsdale who introduced us, and especially me, to a guy named Bernie Vonderschmidt, who was the CEO of Xilinx.
Yep.
Bernie actually personally invested.
So they were early angels.
Bernie was in the B round.
Yeah.
But that was early. I met with Bernie before I left the government.
Oh, you did? Okay. So you planted some early seeds.
And he was a huge advisor to us.
Yeah.
And what we realized was we had to figure out what we were going to do with this technology. We had the inside knowledge that after 10 years and 10 million of government funding, Mark and I knew the technology absolutely worked.
Okay.
We had built chip after chip after chip. We could prove it. So we didn't have any nagging, what if this doesn't work, kind of thing, which a lot of people do. They have an idea. Of course. They're a college professor, but they never actually built one. We actually owned a fab for 10 years at the Navy. So what was interesting was, I remember in the very early round, we went to CES in Las Vegas. It wasn't nowhere near the size.
Yeah.
And my instinct, and Mark and I had the advantage over Rory, that we knew the semiconductor industry and how competitive it was.
Sure.
Rory had the advantage over us that he didn't.
Yeah.
And so my edict was, look, we're CMOS, which is the good news. It's going to win over everything. And at
Yeah.
the time, IBM would have told you, no,
Yeah.
bipolars,
Sure.
you'll never make a computer out of CMOS.
Yeah.
Blah, blah. But what I told everybody was, if you can do it in straight CMOS, we were a specialty version of CMOS. So when I talked with Bernie or whomever, I'd say, what can we do different? And we found that at CES was, I believed, the radio was the next big thing, that the computer wars were over. Intel won it, IBM lost it, DEC lost it.
Yeah.
Microprocessor was going to win, and there was this juggernaut in 1990.
Yeah.
Obvious even then.
Yeah.
So the rule was, do not do anything that anybody else is doing. The radio was not considered to be an important market other than military.
Yeah.
Cell phones were toys for either Hollywood starlets or real estate agents. And so, but we went to CES. Rory was highly skeptical because I was looking out a little farther than Rory was used to looking out. He wanted
Sure.
something a little nearer term. I said, okay, I tell you what, everybody go around CES, take a pad with you. For every portable computer you see someone using, put a tick mark. For every portable telephone you see someone using, put a tick mark, and we'll add them up at the end of the 3 days we were there. 42 to 1, cell phone over. And that's when we literally, very early on, said, we are going to be in the wireless market. The emerging opportunity is the cell phone. I know it looks farther out there, but we can establish ourselves in CMOS, in radios, before anybody else, and then
Sure.
we'll be different. So
Sure.
that was probably one of the things we did right. We anticipated RF and wireless was where we
Yeah.
were going to use this technology.
And did that first $1 million get you to a prototype or some type of minimum viable product?
No, it did
or-
not give us a product.
Okay.
It got us to the next round.
Okay.
And the next round, we raised with $3 million.
Okay. And this is where Bernie Vanderschmidt came
Bernie
in?
invested. We had some smart people that invested. The Angels re-up that we had originally acquired. $3 million round, and it did get us into a fab beyond the Navy lab,
Sure.
which was IBM.
Okay.
First TRW.
TRW then they closed down on us before we got far enough along. They closed their fab, and then we quickly moved to IBM in Rochester, Minnesota.
But
Okay.
to follow up on that point, the guy who got us into that fab was Bernie Vanderschmidt.
Yeah.
Because when our TRW, Bernie was funding us by then. Because he believed our technology could help his products, FPGAs.
Sure.
Intel was funding us. Union Carbide was funding us.
Now
So we reached out in
NRE.
NRE. Okay.
NREs,
great. Okay.
not investment. Bernie
Okay.
personally.
Okay.
But that gave us a lot of credibility. And when the TRW fab closed, I said, Bernie, where do we go? And he said, you have two choices. Go to IBM for the best technology, or you got to get to Japan eventually for the best cost.
Yeah.
In those days, that's where all the great foundries were.
Sure.
So that gave us a roadmap, but unfortunately, it was this constant, every 2 years, the fabs closed.
Sure. Sure.
Which we were just getting products out.
Yeah.
And the fab would close,
Yeah.
which was our Achilles heel.
But you had getting back to the financing portion of it.
Sure.
So it was really based on your personal credibility to get kind of the first $1 million in, primarily through friends and family. But I really like what you guys were doing in that you were seeding the idea with people beyond the first investors from the time you had the first investors. I think a lot of entrepreneurs don't do this, and they see fundraising as an event versus a process. And as a startup CEO, even when you're not raising a funding round, if you know eventually you're going to have to raise more money, you should always be out there evangelizing and socializing and talking about the progress you're making. So talk to us a little bit about that, Roy. Like with Bernie, like what were you guys doing during that first year plus that you were going through the first $1 million, and then how did he get more excited about it over time?
Well, the Bernie Vanderschmidt's, the individuals in industry that also invested in this B round gave confidence to the early investors.
Yeah, and that's why they re-upped.
They re-upped.
Yeah.
And that also gave confidence to the strategic partners that we were talking to, like IBM. And the NRE that we received from Xilinx and from Intel at the time, also we got to leverage that. So
Yeah,
we
you traded
invested-
off other people's credibility, like these people believe in us, so
Right.
we actually must be onto something.
But
Exactly.
and it was continuing to work the network. I mean, And Ron and I used to, if you're not raising money, you're not doing your job.
Yeah.
You've got to be raising money all the time
Right.
as a startup.
Right.
Even though you just closed a round, that next round has already started.
Yeah.
And you've got to put together an investor list that's a pipeline.
Yeah.
And the pipeline changes.
Yeah.
And the pipeline could be all over the country.
Yeah.
So you've got to go where the investors are. Our investors were in, I'm going to guess we had investors in 20 different states in the country.
Yeah.
Yeah, and I'd say a third.
Midwest and East Coast and again, all over. You've got to go where the investors are. And then the other area that we did really well, even though we weren't required to, we actually had shareholder meetings. Actual shareholder meetings once a year.
Mm-hmm.
The shareholders would fly into San Diego. They would spend the night. We had actual stockholder meetings. Ran it like a public company.
Mm-hmm.
We had newsletters that we'd send out on a monthly basis.
Mm-hmm.
How we're doing. Highlights and lowlights. Not all highlights.
Yeah.
Ron would hate to write a newsletter. We just lost a fab, but we would tell him that.
Mm-hmm.
Don't hide it.
Yeah.
Get it out. They trusted us. And then when we had great news, they celebrated with us.
Yeah.
So it's investor relations. So we had the best investor relations, I think, of any startup I've ever seen. And that's where a lot of startups fail.
Now, did you guys have board members beyond the founding team?
Yes, we did. We had board members. His brother-in-law joined our board.
The Intel guy?
From Intel.
Yeah.
I had a chance to gain an investor in the A round, who at the time was chairman and CEO of 3M.
Okay.
He not only invested in the company, he joined our board.
Okay.
So we did actually have a board of directors made up of shareholders, and every board member we had were actually investors as well. That was a requirement.
We set that.
That was a requirement. If you were on our board, you also invested.
Yeah.
The last question I wanted to have asked when I was seeking other people's money was have them say, "Has your board invested?"
Yeah.
And I want to say yes to that question.
And I think we really did a good job early on of recognizing corporate partners provide huge credibility. They provide resources that you can't possibly afford to pay for.
Sure.
They provide a network.
Yeah.
Again, Xilinx, Bernie. I used to go up to Intel on a monthly basis.
Yeah.
After my meeting with the research people that were funding us, I actually got lucky enough that Gordon Moore, I met him through
Lou Lair,
the 3M guy. He said, "I want you to come in here and tell me what's going on in my own company." So I literally would meet with Gordon Moore for an hour or two.
Yeah.
It was like, I can't believe I'm in the room with the industry right
Yeah.
here.
Yeah.
But we kept it clean that what these corporate partners did for us, the one thing they really don't want to do is put in capital to pay for your capitalization of your company.
Yeah.
So they'll give you R&D to go do something, but if you say, "I want you to buy me 5 computers so I can do," no, that's on you. That's a balance sheet item. We're funding you through, because they want an arm's distance.
Right.
The investors
equity's hard
provided
for them to do as well.
So we relied on investors to put the equity in.
Yeah.
And corporate partners to do all this heavy lifting. And IBM put in $5 to $10 million
Easy.
worth of development. They refined our process from the one we left the Navy lab with, which was an R&D process.
Yeah.
They put in place an absolutely manufacturable process that Peregrine uses to this day.
Mm-hmm.
And when we had to go to the next fab, we literally walked in with 4 moving boxes full of documents.
Yeah.
And those fabs wanted to do all this due diligence. We just said, "Here, read this. It says IBM on it."
Here's the process flow.
And they literally said, "Oh, we're done. We'll just do what they said."
Yeah.
We can't. Startup can't do that.
Right. Right.
Even Xilinx can't do that. They were fabless.
Yeah.
At the time, IBM literally
They were the gold standard.
It was they were
Yeah.
they still are a gold
Yeah.
standard for technology. So
Yeah.
we did a good job of understanding what and when to use a corporate partner.
Yeah.
And I think a lot of mistakes that young entrepreneurs, they want to go to an Intel and have them fund them, invest in them, promise them to buy things, and it's just too hard for those big guys
Well,
to do that.
it's just a difficult thing. I mean, even in Entropic, we did have a lot of corporate strategic investors, but it's a different group than the actual operating group. You know, if you can get a non-recurring engineering and an RE type of contract from the actual people that are the customers or the partners, in many ways that's actually more valuable. And there is this kind of weird conflict of interest that exists as you get corporate strategics on your board or as board observers. And so, I mean, I think there's value in it from a credibility standpoint. So, but in either case, I think it's good to get these companies that are maybe even potential acquirers, but also, you know, key partners involved in your company in some way.
But I would keep the two functions somewhat separate.
Yeah.
For example, we gained an enormous amount from our corporate involvement with Intel.
Yeah.
In terms of credibility, product. I mean, we actually asked for a license to the 486. They came that close to giving it to us.
Mm-hmm.
Subsequently, Intel put in 10 to the sevens of dollars into Peregrine.
Yeah.
And a few years later, that was Intel Capital.
Yeah.
And a few years later, when Intel was fed up with their tax rate, they walked away from the whole investment.
Yeah.
Because their net present value of the tax write-off was greater than the net present value they saw in our company.
Sure. Sure.
So by recognizing, you know what, the investment was one thing, it was Intel Capital.
Yeah.
The due diligence and the support from what they were doing, we maintained that value, frankly, for life.
Yeah.
So it's not that there's anything wrong with corporate money, it's just that, especially nowadays, a lot of times it is from an Intel Capital or
Exactly.
or almost
Yeah, I mean, we had
sovereign
both
wealth
types. We had the types that were like Comcast had their own venture group. Intel had their own venture group. Other companies like Cox Communications, you know, family-oriented business, even though they're huge in media, they're huge in cable. It was really the corporate guys because they didn't have a venture arm, so to speak. So it was interesting because every time, I think it gets to the point with credibility with institutional investors, having, whether they're corporate strategics on the investment side or strategic partners on the NRE side and the co-development and partnership side, all those things build your credibility.
Right.
Because these are
absolutely.
people, unless they're completely orthogonal and, you know, but that's typically not the case.
Qualcomm's a perfect example of how that worked incredibly well.
Yeah.
Their early funding from, I believe it was Sprint,
Yeah.
and then South Korea Inc.
Yeah. Same way with Broadcom. I mean, Broadcom had early investment from 3Com, from
Scientific Atlanta.
from Scientific Atlanta, from General Instruments,
TRW.
and TRW. In fact, they never had to raise venture money. That's why the Henrys have, you know, maintained so much of their net worth, because they never got venture capital involved in their company.
Yeah.
So this is the, you know, mid-90s at this point. You know, obviously a lot of ups and downs with Peregrine over the years. Eventually the company went public and then was sold to Murata. But let's fast forward to today, and especially I want to get both of your guys' perspectives now that you're on the angel investing side. And, you know, we're not in Silicon Valley, so, you know, Silicon Valley is unique in terms of how incubators work and how angel investment work and how venture capital works, but there's an enormous amount of innovation and really cool creative companies outside of Silicon Valley. As you're kind of involved, you know, running EvoNexus, you know, a major technology incubator in Southern California, and Ron, you're involved in a variety of different angel investments. Talk to me a little bit about that, and for our audience, kind of based on your experience on what you're doing today, what are some of the key points about, you know, attracting the right angel investors and the right corporate strategics?
Well, the technique to securing angel money has not changed at all.
Okay.
It's still there. It's still based on what we've just described as how to raise angel money. It starts with friends and family and their friends and credibility, and showing the angels that you're a really good steward of their capital, keeping them informed.
Yeah.
So it's not changed. What's changed is venture.
Mm-hmm.
That's the big change. And venture, by and large, in Southern California has disappeared.
Yeah.
There used to be a number of large venture funds in Southern California, Enterprise, Mission, others. They've completely gone out of business. They're no longer around. And they're no longer around because they didn't return returns to limited partners.
Yeah.
The venture funds in the Valley, there's only really a small number of them that actually return the fund.
Well, it's primarily based on massive, not even home runs, like grand slam home runs that more than make the fund. I mean, if you weren't in Google or Yahoo or Facebook or some of these spectacular deals, you probably didn't do
But that was their model, right?
Yeah.
They knew, described it as a roulette wheel, where there's one, if roulette, the average
Yeah.
is 36 numbers. There's one on that board that's gonna pay 360 to 1.
Yeah.
So if you put a chip on, if you know that,
Yeah.
you cover the board
Yeah.
and the one pays it off.
Yeah.
So that's, I think, a big part of what's happened personally to venture is that, I mean, the number of public companies are down, the number of startups are down, it's just, the statistics have changed.
Yeah.
It's more and more expensive. I mean, we know the chip business.
Well, that's why they've moved upstream. I mean, the returns weren't there, and it was largely due to the amount of early investment, which was very high risk. So it's almost like the venture industry has become more like a bank and less like an aggressive equity investor, because the amount of risk they're willing to take is much lower, but they still expect pretty spectacular returns.
Which is, that's their thing. So one thing, Rory said, the angel game hasn't changed much, and he knows that way better than I do, because
Yeah.
he's so involved with it.
Yeah.
But the thing that I think is constant, and the piece of advice, I just gave this advice to a group just this week,
Yeah.
is my absolute favorite book on this whole question of starting a company is still Bill Davidow's book, Marketing High Technology.
Yeah.
And if I boil that down to 4 words, it's be different or die.
Yeah.
And that was one thing Peregrine had for it in spades. We were doing something no one in the valley was doing. In
Yeah.
fact, when I put down the risks and rewards, my number one risk was our technology has such a terrible history. We'll never get past that. We'll just get kicked out.
Yeah.
Turns out people were willing to listen, so we got past that. But
Yeah.
we could easily articulate our difference.
Yeah.
Now, a lot of times I'll talk, hey, how's it going at EvoNexus? And he'll see, if I see one more app company come in here and say they're going to open an app for the iPhone
Yeah.
and flip the company for $5 million, I'm going to blow my brains out.
Yeah.
But it goes back to that be different or die. Who needs,
Yeah.
maybe the world does need another app, but why does an angel investor need to invest in something like that given all the risks?
Sure.
I mean, they're better off just putting their money in a hedge fund and taking their
Right.
risk-adjusted 10%.
Yeah.
What's happened in the Silicon Valley as the venture funds have moved away from early seed and A round investing to later rounds, B, C, D rounds that have been de-risked, that early stage money's coming from angels.
Yeah. Angels and super angels.
And they really are super angels.
Yeah.
An angel here, in my opinion, is someone, a legitimate angel here is someone that can write a $25,000 check and not have to call home and see if that's okay.
Yeah.
An angel up there can write $1 million check and not have to ask his wife if that's okay.
Yeah.
These are angels that are worth $400, $500, $600 million, and they're writing very large checks very early on.
Yeah.
That's the difference.
Yeah.
We don't have that here.
Yeah. Well, I don't think anybody has it to the level that Silicon Valley has, and it's a unique situation, the San Francisco Bay Area, and I don't think it'll ever be duplicated. The ecosystem's too well established. I mean, you've got so many top tier VCs. You've got Stanford, you've got Berkeley, you've got, so much talent, and the talent is very mobile. Plus, there's one thing that I noticed, because I worked in Silicon Valley for 10 years prior to moving to Southern California to run a few companies. The maturity of the senior management capability up there is also so strong and so mobile. When you're building a company outside of Silicon Valley, it's really tough. You get to a certain level of the game, and bringing in the right talent is very, very challenging. So even companies like Illumina, the genome sequencing company, who still has their headquarters here. I talked to Jay Flatley, who was their CEO, their early CEO. He said half of the VPs are in Silicon Valley, just because that's where a lot of the talent is. It's really fascinating, kind of how that works when you get to certain levels of scale. So then. Talk to us a little bit, Rory, especially you, about, obviously you're dealing with hundreds of entrepreneurs in your incubator, and is this understanding of how to raise friends and family rounds and how to raise angel rounds well understood and well established within the entrepreneurial community?
No, there's seminars that the law firms provide. There's seminars you can get at other locations about how to raise angel money, but really the angel money has to be raised by the founders. You can't broker it out.
Yeah.
The founders, the CEO have to raise the money.
Yeah.
And they have to understand the investor. You know, this means sitting down at the dinner table at night with the investor and the investor's spouse.
Mm-hmm.
If we didn't have the spouse there, we probably weren't going to close that investor.
Yeah.
It's a family decision at that level.
Yeah.
The investors that I see invest in companies at EvoNexus believe in the team. They know that the challenge is going to be huge. They know that there's going to be time to market, there's going to be competitors, but they believe in the team.
Mm-hmm.
And I don't believe that the current entrepreneur realizes how strong of a network they really have.
Mm-hmm.
They just got to utilize it.
Mm-hmm.
You need to. It's okay. It's okay to ask your parents to invest if they're qualified. If they're qualified investors, if they meet the Reg D requirements.
Yeah.
It's okay.
Yeah.
In fact, they would like to invest.
Yeah.
And if they lose the money, it doesn't matter, really.
Yeah.
They've invested in you, their son, their cousin, their nephew, whatever it is.
Yeah.
If you return their money and then some, now you're really a favorite son.
I have some friends that are venture capitalists, and the only reason why they're still my friends is because they made money.
That's fair enough. But, you know, I would say of the many, many hundreds of private investors we had, we could probably count on one hand, maybe two, maybe 5 or 10, who really kind of carried a grudge.
Yeah.
Along with the fact that for all the things Peregrine did do, it was not a great investment.
Mm-hmm.
It just wasn't. And, you know, that's a burden both Rory and I carry around. We would have loved to have been a Google or a Facebook. We just weren't. And guess what? The statistics are against everybody.
Sure.
We ended up not the worst, which is a washout round.
Yeah.
So, but in the end, you know, and Rory taught me this. Because he said, you know, I said, well, you know, who can we go to? And he said, we have to go to everybody we know. And it was interesting because my first reaction,
that's a qualified investor.
Yeah, I mean, we'll go to everybody we know. You don't know if they're qualified. You'd be surprised what people have.
Yeah,
that's true.
So, I mean, we went to teachers. I mean, everybody has a chance.
Yeah.
And that was what Rory said. He said, you know, suppose you don't go to your parents or your brothers and sisters or your high school buddies. And suppose this is a home run.
Mm-hmm.
How do you face them then? Don't just imagine facing them if it fails.
Mm-hmm.
Imagine, and they did invest, imagine if it blows the doors off and you didn't offer it to them. You have both sides of that coin, and I thought, you know, it's really their decision.
Yeah, and you guys provided a high level of transparency throughout it. You had investor meetings.
Transparency is the key.
You know, I think that's essential, and you know, these are adults. You know, these are people that are making decisions about what they're going to do financially, and you are good stewards of the money. And there's challenges. That's life. I mean, these companies, even the ones that are massively successful. I remember in the early days of Intel. I mean, they almost went out of business.
Absolutely.
I mean, they went to 6-day work weeks, 10 hours a day. IBM was funding them because IBM couldn't afford them to go out of business.
15% pay cut.
Yeah.
I mean, and that was, in our presentations, I remember this was kind of an interesting. I wanted to put in especially a lot of the risks. And Rory, I remember Rory said, when people walk into a house, they don't ask how low the floor is, they ask how high the ceiling is.
Yeah.
But we had to kind of compromise because the engineer in me, I wanted to say, look, this is where the risks are.
Yeah.
Because if you didn't, we always got the most troubling question that we couldn't really answer, which is, if this is so good, why hasn't Motorola bought you?
Yeah.
Why hasn't I fill in the blank bought you?
Yeah.
And the answer we finally came on that, every entrepreneur will get that. And
Yeah.
the answer is, you're going to have to ask them.
Yeah.
Because they see it differently from their perspective.
Sure.
And you as the entrepreneur. If they saw what you saw, they'd be doing it.
Yeah, absolutely. Well, this has been fantastic, guys. Any
can I ask you some questions?
Sure. You can ask me anything.
You mentioned
Rory.
management teams.
Yeah.
You brought up a founding team. You mentioned Entropic, which was a terrific IPO in San Diego.
Yeah.
And what was it about the founders at Entropic, and we both know the founders,
Sure.
that made them realize they needed somebody like you?
I think it was more of a. So there were 4 founders at Entropic. all engineers, and when you have 4 engineers, they all take different roles. You know, one's a CEO, one's, you know, the head of engineering, one is the head of marketing, one's the head of technology or business development. So it was really the kind of lead founder, kind of the godfather of that group, Itzhak Grants, who was the founding CEO, that really saw, based on his experience of building other companies, that they needed somebody complementary to him, to his team, that had more of the business experience to kind of be able to take things to the next level from a commercialization standpoint. So I think that was a combination of the board members, but also Itzhak being very receptive to it. Because I'd had 2 other companies that I'd run where there was significant kind of founderitis, where the board kind of forced me into a situation versus the founder really wanting me there, and that is always a bad movie. You know, the movie always turns out the same way. So I was very sensitive to that when I was interviewing with Entropic, and it was clear that Itzhak really did want somebody there. And we weren't close friends, but we knew each other for over a decade. You know, when he had worked at Connexent, I had worked at C-Cube Microsystems, so we knew of each other. So I think that helped. We had a lot of relationships in common, so we could talk about things. And he was just a total gentleman and a brilliant technologist, and still a great friend today. And I think that's a part of it. You got to have founders that really want to have you there, and there's a clear partition of roles and responsibilities. I think that's one of the things that you guys, it was very clear too. I mean, you were very complementary in terms of how you worked with each other, and you know, that kind of yin and yang, and even the stories about your optimism versus your kind of more conservatism. I mean, I ran into that at Entropic, where, I mean, the engineers wanted the product to be perfect. I'm like, it doesn't have to be perfect. It just has to be better than everything else that's out there. Let's start selling some of this stuff.
Right. Yep.
That's right. That's a great example there of founders realizing they needed something different.
Yeah. So this has been wonderful. Any closing kind of key nuggets you want to leave with the entrepreneurial audience out there?
I would. If you've got a great idea that you think is something that no one's done before, come to EvoNexus.
Terrific. This has been wonderful, guys. This is Patrick Henry, the CEO of QuestFusion, with the real deal, what matters.